Welcome to the fifth chapter of the official Forex Tester Online trading course. It's giveaway time, and not only one giveaway, we are giving out 42 accounts of free Forex Tester Online accounts, so you can use Forex Tester Online completely free for everybody that enters the giveaway on this free trading course. And the conditions are really simple. Let's check them through. Basically, we need to subscribe to the channel and leave a comment under the video to enter. So basically there's 6 videos, so there's 6 entries that you can get. You could win a lifetime license basically for all your life, or basically or 1 year subscription or 1 month subscription. Each video is going to have 1 lifetime, 1 year subscription and 5 monthly subscriptions. So basically in total there's 42 giveaways that you can enter, and basically you can comment on every single video of this trading course, so it's excellent. Each video of this course will have its own giveaway, as I mentioned, and you need to comment under to basically have a chance. On top of that, if you comment with different comments, especially comments that features that you like Forex Tester Online or why you want Forex Tester Online, please comment down below. And basically if you have more than 1 comment, then you have more than 1 chance to win this giveaway. As well, really important, we need to register for a free account in Forex Tester Online. And to do this is really simple. Basically we only need to come down here where we can see our plans, and here we come to free demo, and we just need to enter with our Google account, Microsoft account, or just register with a normal email. And this is obviously is important so you can enter this giveaway. And at last but not least, really important, you need to have an email on your YouTube profile. It can be any email, it doesn't need to be your personal email or anything like that, but preferably the email that you've actually used to register for this free demo, because this email is the one that we're going to use to be able to contact you. So to resume everything, what we need to do is basically subscribe to the channel, like the video, comment the video why you want Forex Tester Online, and register for this free account that I've just showed you at the moment. And this way you'll be entering in this giveaway. Obviously you can have all this information down in the description so you don't have any doubts at all. And we are going to finish this giveaway on September the 6th. And the draw time, basically we're going to do a massive live stream here on our channel on the September the 9th, where I'm going to announce all these winners. And like I said, really important, if you don't have a public email on your YouTube channel, we can't reach out to you. So please, if you are a winner, we have 7 days, or in this case you have 7 days to put your email on your YouTube profile as a contact method, so we can reach out to you and give you your free account. So good luck to everyone, and let's continue with the video. And for me, this is one of the most important chapters, together with the psychology in terms of trading. So today we're going to learn basically how to backtest correctly, how to optimize a trading strategy, and how to not overfit our strategy so it actually works in the future when we're actually live trading. And obviously all this is going to build around a manual backtesting, okay, because at the end of the day, algorithmic backtesting needs other type of backtest, other types of optimization. It's all similar, but you need to have some extra features on that side. But in this case, for manual backtesting, I'm going to explain everything you need to know. So let's start off. So obviously to start backtesting, the first step is to actually have a trading strategy, a set of rules to enter the market. If you watched the previous videos, you've already known how to create your own trading strategy, or how you can search for one on YouTube or in any place on the internet, pick that trading strategy out and all that. So once you've got your trading strategy and you know what you're going to do, then the next step is to backtest it. And the first backtest doesn't need to be anything incredible, doesn't need to be anything enormous, it doesn't have to be a 10-year backtest, anything like that. What it needs to be is a backtest at least of 1, 2, 3 years with more or less 500 trades, 300 trades, something like that, so we can actually get the feeling of the strategy. Is this strategy actually worth putting in the effort to see if we can make it profitable in the long game? Is it worth it? If it's worth it, then we can start with a base, because backtesting is basically all about picking a strategy, backtesting it first to see if it works, and once we've got that, then we're going to go into an optimization. And this optimization, the good thing is that in Forex Tester Online, we've got a lot of tools to actually optimize our trading strategies in the best way and saving a lot of time. And then once we've got this optimization, we need to forward test this trading strategy, because obviously it's we can overfit when we optimize it, and if a trading strategy is overfitted, it won't work in the future. So this we must be conscious. So once we've got our trading strategy, let's say, okay, this is one of my personal trading strategies that I've got. Obviously, this has got the work already behind it. It's been optimized. It's been forward tested and everything. And this is actually a complete forward test of 8 years, okay? Because basically I just picked it and done the entire back test So you can see, so if we have a look at the equity chart, we can see it's a healthy trading strategy where the price, basically not the price, the actual account has its drawdowns, but it always grows more than that is actual drawdowns. You can see we get a spike up here, we get a drawdown period, then it spikes higher, drawdown period, spikes higher, drawdown period, and all that. This is basically what we're actually going to look in any trading strategy. Obviously, there's better ones, we can find better equity curves and all that, but the main thing is that we have our rallies, our spikes are always higher than our drawdown. This is how we stay healthy in the market. But let's say this is a complete normal backtest that I've just done. I've just tried this strategy out and it's the first time I actually backtest it. What have I got to look for? First of all, I need to understand what type of strategy it is. Is it a risk reward? It's got a high risk reward or low risk reward? Will it have a high win rate or a low win rate? Will this go with my way of being? Maybe I'm really impatient or maybe I'm really patient. Depending on how we are, we need to understand that we're going to use one strategy or the other. But if we got all that correct and we've got a trading strategy that we like, in terms of analytics, what we need to look at is basically having a nice profit factor. In this case, this profit factor is quite low, but because it's been an 8-year backtest, and on top of that, it's a complete finished trading strategy. And this profit factor repeats itself in real, and on real markets, it gets even better because obviously I'm behind it and I know what I'm trading. Okay, this is all mechanical. This is all mechanical decisions, but when we enter the market based on discretional, then we can improve our strategy. But that's something else that we'll talk about later on. But first of all, what we need to find is a good profit factor. Our first backtest obviously doesn't need to have a brilliant profit factor because we're just trying the strategy out. But when we come to the optimization, here we need to have some brilliant results. We need to have some like results that you look at and you say, okay, this is going to make me rich. This is what we actually need to find when we first see our first optimization. So basically, if we do our optimization and we see a profit factor like 1.14, and this is the best result we can get, then obviously this trading strategy is going into the trash bin. Meanwhile, if we see a profit factor of 2 or 3 or higher, then we can consider putting in more effort to do the forward test and finally take it to a demo account. But obviously, before we get all these optimization results, we need to optimize the trading strategy. And how do we optimize the trading strategy? Well, the thing is that in Forex Tester Online now we have got some tools like I mentioned before. That is Analytics Insight. This is the first optimization that we can find, and this is all automatic while we're doing the backtest. And this is a good thing, what saves you tons of time. So we have an improvement plan where you can see like try stopping for the day after the first loss to improve profits. This will give me another $1,000 nearly. Then try avoid reevaluating your strategy doing unprofitable sessions. This means that if you leave your trading your trade open out of the session, as you can see here, the European session and the New York session have a good profit factor, they're positive, and the Asian and the New York silver bullet, these trades tend to be losing trades. Okay, and you can see here how they're impacting the win rate. So basically what I'm going to look for is, okay, I'm going to only trade on the European and the New York session. I'm not going to trade the silver bullet, I'm not going to trade the Asian, and I'm not going to trade the London silver bullet. In this case, it's 0 trades, but I'm not going to trade it. As well, try keeping risk below 2% per trade. This depends on the trading strategy. And then like consider cautiously increasing position size after winning streaks. This made me over $10,000 in profit just by doing this quick improvement. And this is basically because this trading strategy has a high win rate. So obviously if I've got a high win rate and I double my position and I get winning streaks, then this will basically make me more money. And if I click in, it will give me a complete idea of what's the best. As you can see here, if I do it ×2 till it drops after 2 wins, so let's say I get 2 winning trades, the third trade, I'm going to go with double lot size until I lose. And basically this would give me an improvement of 83% on my net profit. And this is massive. Let me tell you, this is completely massive, and it's something that I've started to work on trading on real markets, because obviously this trading strategy is a final product. You shouldn't do it if you optimize it. Then try and take in breaks after losing trades to improve your profits, basically because I tend to take 2 trades a day. And as you can see, these 2 trades a day are not being a good idea as well. Try avoiding trading during major news events. This would save me $8,000. And as you can see here, I can look what news is impacting my trading strategy, and this way I can actually not trade while this news comes out. As well, I can see how it actually impacts my win rate. When during the news, I have a 58% win rate. Meanwhile, outside of this news, I have a 76% win rate. So this would make me a lot of profit as well. So at the end of the day, if we take all these things in consideration, we'll be building a more solid trading strategy. And this obviously is the most important, that our trading strategy is solid. This is for the optimization. Okay. So now we've gone through this. Obviously, I wouldn't say to pick them all and backtest them all together, because that can cause some confusion. So the best thing is okay, I won't trade after the first loss that I get. So instead of 1 trade, instead of 2 trades, I'll take 1. Then I'll I won't leave my trades longer than X session and things like that. Maybe go and just pick 2. Backtest them out and see how they work. But once we've got all this out of the way, the actual analytics insight, obviously it will take its time, and it's something that we need to take time while we're doing. We're going to hop over to the exit optimizer. And the exit optimizer obviously gives us a massive potential of winning trades. And this obviously is something that is completely overfitted. This doesn't mean that if you get this result, it's not a guarantee that your trading strategy is going to perform like this in the future. Otherwise, we'll all be millionaires. The thing is that this overfits your strategy because it looks for the best take profit, stop loss, max holding duration for your trading strategy. This is the perfect match. This is what you should have done in each trade to make everything perfect. But obviously, when we're live trading, we can't do things perfect, because a decision that let's say this stop loss of 2,000 big points and this take profit as a disabled take profit in a max holding duration of 16 hours, as you can see, this probably isn't the best to trade in the future, but it's the best result for these 8 years of backtesting. But it doesn't mean that in the future it's going to work the same way. And I know it all can be a bit dense, but trust me, once you do it a few times and you get used to it, it's going to get a lot easier. But as you can see, what I like to do with the exit optimizer is actually look for sweet spots. So let's say I can maybe look at a sweet spot of 50, 56,000, depending on my trading strategy, depending on how I actually feel when I trade, how much range I tend to find that it's a good idea. Obviously, this is based on each trading strategy, and that one is different. But as well, we can scroll down to take profit, and as you can see, take profit, if this one is 50, and if I bring it to a risk reward of 1-to-1, so that would be more or less sitting around here, like 44, and 50 are more or less a risk reward of 1-to-1. This is making me $130,000 as an improvement. Okay, now as well, I can bring my my max holding duration and look at this. Right at the moment, 16 hours and 58 minutes gives me 133,000. This is holding a trade for a long time, and in some prop firms you can't even hold them so long. But meanwhile, if I bring it down to 3 hours, okay, to 3 hours to 5 hours, it's giving me $127,000. So the difference between one and the other really doesn't matter, but what does matter is the amount of time that we are in the trade, because obviously the more time we're in the trade, the more time we need to be actually focused on that trade. Otherwise, we basically are just opening and forgetting the trade, and that's not a good idea. As well, we can scroll this around, and as you can see, if I bring this above 1 day, then it starts to go negative. So here we can get a general idea of what's our best stop loss, best take profit, and best max holding duration. But what we need to do is basically understand how this correlates with our trading strategy. So let's say if I normally use 12 big points, okay, as a stop loss, and I use as well take profit of more or less 12. So obviously this is just an example, but more or less this is the take profit and stop loss that I tend to use. Okay, now I know this. What I need to find is a sweet spot. Okay, if 12,000 is giving me a negative result, what happens if I bring it round up higher up? Okay, the results are not looking good. So if I bring it a bit lower, then it does. So as I can see here, right now, if I bring it down to 8,000, then this is giving me more or less a risk reward of nearly 1-to-2. I can see that results start getting better. Okay, I'll leave this again at 12 big points and bring this down to see how that works. Okay, the take profit, as you can see, if I bring it down, doesn't look good. But if I bring it up to 21, 24, 26, I can see that it's getting better results. So what I need to find is a sweet spot. Sweet spot, obviously, that I can say, okay, between 16,000 points and 32,000 points, that is a sweet spot for me, and I can find my take profit in that area. Because depending on how you place your take profit, that depends a lot on if you use market structure, if you use an RSI level, a MACD level, if you look for another sign, another signal. So obviously we need to play around with this and find out a sweet spot and say, okay, the best results come after 21,000 points. So now I know that, I can bring my stop loss around again and find another sweet spot for the stop loss, and then I will have my perfect range of stop loss, take profit, and max holding duration. Another thing that we can do is directly ignore or disable take profit and stop loss and just play with my max holding duration. Okay, and I can bring it around here and see if any of this time that it's given me is correct for my original take profit and stop loss. As we can see, this time here doesn't come in handy because my trades tend to last less than 3 hours. Okay, and most of the times they go really fast. So I say I can add a take profit income more and scroll more or less around. So these are the two ways that we need to use to actually optimize our trading strategy to get the best matching trading results, to get the best optimized result, and as well obviously a complete overfitted trading strategy. But don't worry, because overfitting is okay if we don't take it straight to a demo or real market account. Now the next step is to forward test this, and this is one of the most important things in trading. Forward testing, I could say, is the top number one thing that traders do wrong, and it's the top number one that traders should do with every strategy they use, because the forward testing is like it's like trying out the strategy before taking it into real markets. But obviously we can't just forward test 1 month if we've done an 8 euro backtest, because obviously that makes no sense. What we need to do, and what I like to do, is follow the rule of 3, 2, 1. Okay, so basically I always forward test 1/3 of my backtest. So if the total project is going to be 3 years, I'm going to backtest for 2 years and optimize in these 2 years, optimize the parameters for these 2 years, and then forward test for the last year. And here is another important thing. How do we know when a forward test is correct? Because it can be positive, but it might not be correct, and we might be about to start trading with a bad trading strategy. What we need to focus on is on the metrics. So what I need to look at is, let's say this is my forward test or my back test, and I've got, like we saw here, a 1.14 profit factor. Let's say this is a back test. Okay, this is a back test that I've done. I've got 1.14 profit factor. Now, something important is that my forward test needs to have a similar result in terms of a profit factor. Okay, so if let's say my profit factor is 1.14, in my back test, in my forward test, I need to find like a 1.10, 1.15, 1.20, 1.30. If we get crazy results like a 2 profit factor, it doesn't mean it's bad, but it's suspicious. Because at the end of the day, it could just be that the markets happen like that, and your trading strategy has got better results. But we need to take in consideration that that's not normal, and most of the times it should follow the same, more or less the same profit factor. Same happens with the win rate. The win rate is something that should stay similar, losing or winning. Okay, because basically our equity chart can be on an uptrend and then in a downtrend, and we've still got the same win rate, just that we're having more losing trades in a row. So one thing that I always need to find the same between my backtest and my forward test is the profit factor and the win rate. If these two are more or less matched together, let's say a profit factor of 1.5 and the forward test gives me a profit factor of 1.6, that is a really good sign that the trading strategy can perform well in the future. Because at the end of the day, we're interested that the trading strategy works in the future. So once we know that, and our win rate performs the same, let's say we've got a win rate of 74% and the forward test gives me a win rate of 69 to 80% win rate, that's more or less a sweet spot, and that is completely normal. So if I get these two ranges, that is perfectly fine. Another thing that I like to look at is basically my max drawdown. If the max drawdown matches more or less the max drawdown of the backtest. Obviously, the backtest, as it's got a bigger sample, like it's 2 years, and the forward test is only 1 year, then obviously there's more chances to having a bigger drawdown in 2 years than in 1 year. So we don't have to go crazy on this too much, but more or less see if the drawdowns see similar, as well as the max consecutive profit trades in terms of winning trades and losing trades. This must stay more or less similar as well, always with the same sweet spot in terms of, let's say, if in the backtest, if it's 21 profit trades in a row, then in the forward test, it should be maybe from 16 to 26, something like that. So that's more or less looking for the sweet spot, and it more or less stays the same. So once we've actually done this forward test, now what we'll do is a complete back test, okay, putting together the actual back test and forward test and see the analytics. And once we've got this, we'll be able to have like a more trustful analytics on how our trading strategy is really performing. And the main things we need to look at is basically if our win rate stays in a correct way based on our profit in our risk reward. In this case, you can see that the average profit for this trading strategy is $100. Meanwhile, the average loss is $250. So it's a negative risk reward, nearly zero. I would say it's 0.45 to 1. It's more or less the risk reward that this one is following. If this risk reward goes well with the win rate, because obviously if our win rate is lower than it should be, then at the end of the day it's going to be a losing trading strategy. But we always need to check that to make sure. And then obviously we need to check our profit factor. Depending on what trading strategy we're going to use, our profit factor is going to be, it's got to be higher or lower. I can set this profit factor of 1.14 because basically it's my manual trading strategy and I know how I trade it. I know that I don't take every single trade. Sometimes the stop loss is a bit different, and sometimes the take profit is a bit different because I add my discretionary touch on my trading strategy, because at the end of the day, I know what I'm trading, I know the market I'm trading, and I know what time I'm trading. So at the end of the day, I've got experience while I'm doing it. And all this is included in my trading plan. So that's why I can accept this based on that this is a complete mechanical execution. Meanwhile, my manual trading isn't a complete manual execution because I have this discretional part. But if you are going to look for a complete mechanical strategy and you are not going to change anything, you're going to have to be looking at a profit factor of minimum 1.3, 1.4. Why? Because then comes commissions, then comes slippage, then comes fees, and then comes all that will actually lower your net profit. So you need to take in care that if you're going to use a complete mechanical trading strategy, in backtest, it's got to have a profit factor of 1.3, 1.4 and above. Because otherwise, when we take it to the real market, we can't expect it to be better. It's always going to be worse than our actual backtest. So I apologize if it's been a really dense information that I've just dropped in your head. But in any case, if you have any doubts or any questions, please drop them in the comments, and obviously I'll be reading every single one and replying to everybody. So like I say, if you do have any questions, drop them down there, and I hope you've enjoyed this 5th chapter of the Forex Tester Online trading course. This is one of the most important. That's why obviously it's a bit more dense and it's got a lot of information in it, but I'm sure it can help you out. And the next one is we're going to talk about the psychology in trading. That is one of the most important ones as well. So stay tuned and don't miss that one out.